everybody. This is Timothy Lee, co-founder and CEO of LendAPI. Today we have a special guest, John Gordon, CEO of ValidiFI, one of our top partners on our platform. And I've been wanting to have John coming into the show for a long time now. John, I know each other for a while, and he'll get into it. And I heard that John on a podcast earlier last week. I'm like, I gotta get him on to really dive into risk, credit, fraud, identity verification. So I'm super excited about this episode. So, John, welcome to the show, and tell everybody about you.
I really appreciate you having me. I appreciate you reaching out. As you say, I think not to age ourselves, but I think we've known each other for 12 plus years.
Yep.
So it's been a while. So I really appreciate you having me. And yes, I am with ValidiFI, and we are excited about the opportunity to both partner with you as well as to talk some about the solutions that we're offering in the marketplace and some of the things that we're seeing in the broader landscape.
Yes, I love stories, and I was prepping for the show and went into your profile, went onto the website as well. You work with a lot of people, John. My God. I mean, it's endless logo scrolls on your website. Tell us about some of the new ones that you've been working with.
Well, I sure appreciate that. So we have been really fortunate in that we are working across credit and risk, fraud, and account validation. And the account validation side is where we've really encountered some different logos. So we're working with Adyen, which has been a wonderful opportunity for us. And we're working across a lot of different verticals that in our credit and risk business, which is predominantly focused on non-prime consumers, we're encountering folks that we haven't in the past, and it's driven by the need for them to comply with NACHA's web debit rule. But there's so much opportunity above and beyond just compliance that our solutions are helping our clients realize.
Yeah, I detect some acronyms. NACHA. We're going to get to that in a second. But when we say accounts, what do we mean? Credit card accounts, debit card accounts, checking accounts? What are we talking about here?
Great question, and I should have clarified. NACHA is the National Automated Clearinghouse Association. It is the governing board for account-to-account transactions that are not card-based. And so they passed a rule, and it went into effect in 2020, and we all realized that 2020, for all practical purposes, was a lost year because of the COVID pandemic. And then they punted compliance to 2021 that said anytime you take a payment direct from a consumer or business via ACH, Automated Clearinghouse Account-to-Account Payments, you were required to validate that that account was open, valid, and facilitated that type of transaction. They have updated that rule in 2026 to include all transactions, not just those initiated over the internet, and added to that a fraud component that required ongoing fraud checks. And the idea here is that we're going to link the consumer to the account. We're going to do some additional checks around those consumers to protect that transaction type and eliminate fraud as best we're able.
We know each other for 12 years. We've worked in the industry for 20 plus. Before NACHA handed out this rule in 2021, 2020, what tell us, Uncle Gordon, what was the old Wild West felt like?
Well, I'll tell you.
Tell us some stories.
The Wild West continues to exist today. And I'm going to go even more near-term history. So when we look at or encounter different types of fraud, the reality is that it's the repurposing of accounts. These fraudsters act en masse. It's almost like they build up a little bit of a track record, then it's a large-scale attack of fraud. And we worked with a client whose primary issue was email addresses created in the most recent 30 days.
Sure. Yep.
was the common thread that we could link across these accounts. When we
Wow.
identify those, we can point that out.
Right.
I'll share another one with you. For guys yours and my age, landlines are among the riskiest inputs for telephone data that we see from consumers today. It's voice over IP and landlines are the two
Hmm.
riskiest types of phone numbers, outpacing burner phones and all of the
Wow.
different connotations of that you can arrive at.
Sure.
So
Okay. So it's not just taking the routing account number.
that's right.
Tell us about it. You guys are triangulating all sorts of device location, maybe geolocation for what it's worth, and email, some pseudo PIIs, really put a story together. Why this account exists, how
Well,
it
that's
came to
exactly
be.
right. And as you know, based on your risk background, it's never just one thing. It's the
Mhm.
compilation of things.
Right.
So an account, I'm constantly asking our data science team, if an account comes back valid and I can name match the consumer, why would
Right.
you still not do business with that consumer? And the answer
Mhm.
they give me is if I can connect that consumer to greater than four bank accounts. If that consumer's last transaction in a 30-day window was insufficient funds, NSF, there's a 71% likelihood the next transaction will be NSF. So
Right.
there are reasons above and beyond that. So
Wow.
you know better than I do that frequency of change, or what we often term velocity,
Right.
uncovers a huge,
Right.
huge output of that consumer's applying with their fourth phone number, their fourth
Yep.
email address.
Yep.
All of these things are factors that will lead you to making different decisions. And those different decisions might be step up authentication, where you say, I'm going to ask that consumer to log into their bank account because there is enough concern here that I want to inject some
Right.
friction into the process.
Right.
And
Could be
in
false
yours
positive,
as
but
well.
prove it out. Yeah.
Yeah, Timothy Lee's clean. That's his account. Everything's good. I want to put
Right.
him on the fast track
Right.
because a recent study said that 68% of consumers will abandon an online transactional process if they encounter friction. And we are living in the world where it's the consumer first environment. Loyalty is largely a thing of the past, and consumers want that opportunity to transact at their own pace without too much encumbrance. And
Right.
ultimately, they will go elsewhere if they
Right.
feel like they're up against it or they're being asked, I'm not going to log into my bank account for
Yep.
a loyalty card program. That's me. Some folks will. I'm not going to.
Right. Yeah. Okay. There's a couple of things I want to touch upon, right? That sequence of events, people will use ValidiFI's product process to kind of just interrogate everything behind the scenes. And you brought up log into account, right? So that now there's like two camps out there. The open banking folks, hey, you know what? The first thing you got to do is log into the account, and we can talk about how much drop off there is. And then there's the other camp that I think is more intelligent. Say, hey, do as much background checking without the customer ever noticing what's happening, and to bifurcate that experience. Tell us about that philosophy there.
So it is controlled largely by demographics. Younger people live online. Oftentimes, they basically tell you everything that's happening on their life online anyway.
Right.
Our answer largely is why not both? And I think the reality of open banking in the US is it doesn't exist. So
Hmm.
if you log in and you credential into a bank account, which that's a solution we support, and there's a lot of people who do it well, and there's a lot of value within that,
Right.
but not everybody's going to do it. And there
Right.
are certain scenarios where I'm happy to do it for a mortgage, for
Of course.
a
Boat,
loyalty card.
car, whatever.
Yeah,
Right. Yeah.
exactly. Right?
Yeah.
Depending on the size of the transaction, I'm more inclined. If
Right.
you're asking me for that level of access, when I'm signing up for a Circle K loyalty card, I'm not going to do it. So
Right.
I think that's the first thing. The second thing is when you are collecting data from consumers,
Mm-hmm.
an account and routing number is part of that payload, they have
Mm-hmm.
to do nothing. The third thing is because of the fact that open banking doesn't truly exist today, meaning I can see all your accounts,
Yep.
I think that service providers and financial institutions
Mm-hmm.
should be asking themselves, what more is there to know about this consumer's bank behavior? So you just gave me your account. It's clean, looks great. But do you have another account? Do you have
Mm-hmm.
other accounts where you're transacting with your gaming, with
Mm-hmm.
your buy now, pay later, with other forms of debt that are going to radically change how I view you from a credit risk standpoint?
Right.
So the answer is both. The answer is offer both so that you get the highest interaction take rate that you can achieve. And then when it comes down to high value interactions, there should be step up authentication where you
Right.
have an opportunity to say, hey, Tim, looks great, I'm good. Or, hey, Tim, I can give you a better rate. Or there are a lot of ways to portray this if you're
Right.
willing to log into your account.
Right.
I think sometimes using the carrot and not the stick is going to
Sure.
lead you to getting valuable information.
Right. You can get your money in 3 days, or if you just one last step, log in, we can instantly wire you the funds, right? In the process, do a little bit
100%
more
agree.
verification. Yeah. One of the things you mentioned earlier about fraud detection, I love the space, is that I just remember, if there's multiple SSNs attached to one routing account number, more than you and your spouse, right? Five or
Right.
six. Yeah, that's a bad story. I just
The
reminded me
magic
about those
number
attributes.
we have deduced is 4. If you are greater than 4, your risk profile goes up 70%.
Right, right. There's no reason why they should have four
Four
authorized account
people
holders.
accessing the same account, if it
Abnormal.
gets to 5, and anecdotally, we saw a single account that we could connect greater than 200 social security numbers to that
No
one.
other reason why
It's
that
fraud.
account should exist like that. Right.
Yeah,
Wow,
it's
that's
fraud.
that's insane.
100% it is.
Right. So let's talk about this. I can only imagine how massive this information set, this database, lies behind ValidiFI. How many accounts, how many transactions, how many of these profiles do you guys see on an hour, daily, monthly basis? It's got to be humongous to be able to, authenticate or validate. I can only imagine probably a billion checking accounts. I don't know.
Well,
You
I'm
give me some
glad you
data.
said that.
Data. Yeah.
From a total inquiry standpoint, we
Hmm.
are at 1.75 billion inquiries in our system. So that's a lot of routing number and account number combinations. Now,
Right.
of course, as with any data set, we have depth of file on a lot of those folks that we work with. So
Right.
let me give you a use case example. PDI is a company that does convenience store loyalty cards
Okay.
for Circle K, other folks that operate in that medium. And what they do is they attach the account and routing number to that loyalty card.
Okay.
And then their clients are able to incentivize you to buy your gas at their station. So
Okay.
turn left instead of turning right, you're saving money, you're earning loyalty points within the convenience store.
Yep.
So we offer their consumers the ability to log in to their bank account or to provide their bank account routing number. And we
Yep.
validate those accounts. We run a fraud check, we run compliance checks and identity checks. And then from that point forward, that consumer, if they pass those checks, is able to transact on that card. The benefit to the end user, the gas station, if you will, is that they get the loyalty and they get the transactions at lower costs without the discount rates that are associated with credit card transactions.
Right. It's a debit rail, kind of a debit card kind of a process,
Exactly.
right? A card associated with the routing account number, like the interchange or whatever fee savings versus a credit card they can push back to the consumers and say, hey, here's a beefier
That's
loyalty,
exactly
loyalty
right.
program. And
That's right. You're increasing profitability. And
right,
frankly, I think there's benefits to all types of payments. There are some drawbacks to many of those types of payments.
right,
Offering your consumer the widest available set of options is obviously, in the consumer first era, the best way to do it. Back
right.
to the dreaded acronyms, A2A is account to account payments, where
Yeah.
you're simply withdrawing funds from your account and depositing them in mine.
Yep. Yep. What about that space? I feel like a lot of people are using like, maybe it's Zelle, or maybe I can just put on my phone and look at some of the apps.
100%.
So in that case, you got to verify on both ends, obviously, right? I mean,
That's exactly right.
wow.
You've got to operate on both ends, and there's a myriad of ways that you can do that. The emergence of FedNow and real-time payments networks that
Yep.
allow for same-day ACH are modernizing some of the opportunities that financial service providers have to utilize legacy things they've done. So if you've heard of penny drops or micro deposits, where
Yep.
I'm going to validate your account, I'm going to deposit 3 cents in that account, but
Yep.
oftentimes that would take 3 days.
Oh yeah.
Well, now what we're helping our clients do is they will ping us and say, is this financial institution real-time payments enabled or FedNow enabled? Those are the two networks that support these types of payments. And if
Right.
we say yes, we're able to drop a penny in that account and attach to that account an alphanumeric code. Simultaneously, they will send their consumer, utilizing their trusted contact information, a text or an email that says, if you will put that information back in the text or email in this 4-digit alphanumeric place that we've marked, then
Uh-huh.
you're validated to use that account. Because a source of fraud has been that consumers will change bank accounts.
Right.
So
Right.
and
That.
sometimes people change bank accounts because they got a better offer, or they
Yeah.
want to go somewhere else, convenience, whatever
Yeah.
the reason, but it gives you the ability to utilize that. So we have an insurance company that we work with that has utilized micro deposits for decades, and they said, we want to keep that. It's ingrained in our business. We
Yep.
want to take advantage of the modernization, do it same day. And if the bank account is not RTP or FedNow, that's real
Right.
time payments or FedNow,
Yep.
then we're going to defer to you, get the account and routing number. You utilize the ValidiFI data network to tell us if that account is open, valid, belongs to that consumer, and will facilitate this
Right.
type of transaction.
I'm trying to wrap my head around this whole process. You get the routing account number is passed through ValidiFI. ValidiFI will drop a penny or whatever it might be, micro deposit. How does the consumer get that 4-digit code? Are you sending that to them somehow?
It's attached to the deposit line. So when they
Oh,
log into
when you
the
log
account,
in,
it'll say you've received a deposit from Acme
right,
Insurance.
in the
It's got the
description,
alphanumeric code. We'll direct them on where to find it.
in the
They
description of that transaction.
100%.
Got it. Got it. And then you get a text message saying from, I guess, the bank or whatever it might be. You look at the transaction and pump it right back to your phone. That
Exactly.
demonstrates verification, authentication, control of the account. That basically is a full circle. That's so really clever, John. Wow.
So we believe that can be used step-up authentication. It can be a starting place. There's any way.
Right.
So
Because
we
I don't have to log into my bank account. I don't have to go through like
well,
a open banking
that's
process.
so ingrained. You
Yeah.
think about how many times or how easy it is. Me personally, my bank account, if I hit the app on my phone
That's
and
right. Yeah. Yeah. I don't have to log in the foreign
facial
object.
recognition,
Yeah.
I'm there.
Yeah.
And
I log in with the app that I'm comfortable with to read that number off the transaction
that's right.
description.
And
Yeah.
studies indicate that 90% of people are doing that
Yeah.
daily, if not multiple times
Yes.
daily anyway.
It is that out of body experience. A new box. Put your user password into some kind of a box they didn't recognize. That's
Well,
the allergic reaction to a lot of people. But if you log into my Wells Fargo Chase app anyway, just read some number. I do that multiple times a day, sending money
exactly.
out, whatever, right?
And I
Wow.
was talking to a gentleman who's a noteworthy person in the fraud space last week, and he said his sister reached out to him and said, "Hey, they're asking me for my bank account and username and password. You told me not to do that." And he
Right,
said, "Yes, I told you that for a reason. Find out if there's an alternative way for you to interact." Some
right.
people are comfortable with it and some aren't.
Yes. And also the friction is with respect to where you are in the product process, what kind of product you're doing. You know, I also talked to somebody, super sophisticated person in this industry. If I mention name, you would know. Got got all of their account wiped out clean.
Ugh.
The investment account, bank account, and it is a little bit of social engineering involved. Everything's gone.
It is scary to think about how I think that's the reality of it.
Yeah,
These fraud changes every day.
yeah,
The goalposts move every day.
yeah.
And these fraudsters are working hard at not working, at not having real jobs, and they find weaknesses in processes, in people's behaviors,
Yep.
and frankly, they're good at what they do.
Right.
So it requires somebody really be locked in on defenses and
Right.
making sure those defenses are enabled and enacted. So
You're
we
protecting the
really have
lender, the bank, and you're protecting the consumer. That
it's
is
the
very
cost
important.
of credit, right?
Yeah.
We're driving up the cost of credit
Yeah.
for everyone every time one of these fraudsters wins.
Wow.
So,
Yes,
and,
and
and
they're
in saying, you were saying that, and you said lender, and I think that's if I may, that's a great segue for us to talk about. The other thing that we utilize, this bank and payment intelligence that we have, is on the risk assessment side of our business, where we are helping lenders make better decisions. So, boring trivia question. Do you know what year the FICO score as it emerged?
they're right here in San Diego. Fire Isaac used to be known as a three acronym company. I feel like maybe in the 30s or 40s, it was invented to detect submarines or something like that in World War One or two.
Well,
Correct
that
me
might
if
be
I'm
right,
wrong.
but the
Okay.
consumer credit score came out in 1989.
Okay.
So I would pose, and I often ask people, how different is the process or the ways in which we can acquire credit in 2026 than it was in 1989?
Well, I think back in the days, you have to like fax somebody your credit report.
Exactly. Exactly.
Today, it's like you get it on your any self-respecting, Rocket Money app or whatever it might be. It's like right there in
That's
front of you.
exactly right. It's exactly right.
Yeah.
And back in the day, the first house I ever bought, I had to bring 2 years of bank statements and 2 years of pay stubs to the mortgage lender, and
Yep.
they took whatever time they wanted to take, and you were on
They had to
pins and
call
needles.
somebody to
Yeah,
pull credit. I think it's somebody in some warehouse and literally go and get the binders out.
that's exactly right. And now, today, to your point, you go on Rocket Mortgage, you've got an answer in minutes.
Yeah.
So the reality of that is the ways in which we acquire credit both opens opportunities for consumers and fraudsters, and it changes the way that we evaluate risk. And I think on top of that, when you look at Buy Now, Pay Later, which issued $1 billion in originations between Black Friday and Cyber Monday, and the fact that that data is nowhere visible at the credit bureaus. Last year, the decision was made to eliminate, maybe it was the year before, eliminate medical debt from your credit report. And now gaming,
Oh,
FanDuel, Poly Markets,
Kaushi.
Yes, all of the stuff that's going on,
Sure.
you can't find it.
Yes.
But if you don't believe that dramatically impacts how you're going to view somebody from a risk standpoint, you're
Yes.
kidding yourself.
Yes, that's right. Gaming as well, right? Not just
100%.
gaming, casino gaming, but online gaming.
It's
Billions are
it's
transacted on these transactions, and that's a completely different behavior.
100%.
You know.
Not to mention the fact, you used to pay $200 for cable every month. Now
Hmm.
you're paying 20, $30 to 15 different companies.
Right.
And at the end of the day, it impacts what you can afford as
Yeah.
a consumer. And that is the bar that, you know,
Yeah. I mean, the
pour
fact
one
that there's
out
a
for the
whole industry to help you
Yeah.
cancel subscriptions, that's a problem. That's a societal problem.
Wait,
Evolution.
think about it. Right back to Rocket Money, they've got an app
Right.
that says, how many subscriptions do you think you have? You've
Right.
seen the commercials. You actually
Yep.
have 15.
Yep.
But
That's
all of that,
yeah,
now,
that's a third of a paycheck for somebody right there, you know?
right?
Yeah.
Pour one out for the CFPB at
Mm.
present, although it could vary depending on who wins which election, it will
Yep.
likely be back. But at the end of the day, the bar they had set was, did you make a consumer a financial offer that they couldn't afford, ability
Right.
to repay?
Right.
And how in the world are financial service providers and lenders supposed to be held to that standard when you can't see how
That's
much
right.
medical debt,
That's
how
right.
much buy now, pay later, how
That's
much
right.
gaming this person's involved in?
That's right.
It's almost like a trap.
That's right. Exactly. And the regulators, CIPB, love to use the word, oh, you shouldn't harm the consumer. You know,
Right.
if you don't have the data, how do we know, right? We just for the, basically their word, we can verify maybe their income, we can verify their balance, but we don't know their behavior,
That's exactly right.
historical
And I'm
behavior.
not suggesting we have all the answers, but I am absolutely certain that we have ingredients that help our clients make better decisions.
Right.
By looking at the bank behavior of that consumer, the
Yeah.
frequency of change, you can begin to see where consumers are stretched.
Yes. We may not know all the cause, but we see symptoms, and you
Exactly.
should look at it and say, hey, well, let's not continue this symptomatic issue, right? There's a root cause, maybe instability in their home or a job or whatever it might be. Let's not perpetuate the symptom at least, if we
100%.
can see it.
That's exactly right.
I get it. I get. Back in the old days, John, I remember early warning services. I think all the banks were trying to rely on that service. I think it still exists to
It
sort of
does.
verify accounts. Yeah,
It
what
is a
happened to that?
consortium of banks
Okay.
where that business, as I understand it, was originally designed for the banks to pool their data to identify account opening fraud.
Right.
And
It's like
it's
a
the
club,
largest
right?
banks in the country,
Got
right?
it.
So it's still in operation. That data is immensely valuable. We also have a collaboration with JP Morgan Payments where we access data from their payments to
Yep.
further quantify consumers so
Got it.
that we're able to increase the coverage of accounts that are inquired, that our clients inquire about.
Yep.
So that's part of our data network. So I think all of those things are
Got
frankly
it.
requirements if you're going to quantify a consumer's bank relationship, the availability of the transaction types that you want to conduct.
Uh, I, I, earlier in my career, I worked at JP Morgan Chase in their consumer side of the business on the risk side. And we did this analysis to see how many relationships, checking account to checking account relationships, does all of our consumers at Chase had. On average, there's 4.5 to 5 relationships. So people writing checks to another bank or taking checks from another bank. So I felt like at that time we could see everything because we see the checks from Wells Fargo. We know their routing account number at that correspondent bank. We know whether to check balance and all that stuff, right? I can only imagine how much information that you guys have now and what kind of derivation you can, write off of that data. with
It's
seeing just about everybody.
it's amazing and it's meaningful. And
Yes.
so, it's not just that data, it's our own data, and we're delivering it from simple solutions to high risk bank accounts. That's an example of something where we see massive predictive nature is you can simply provide us the ABA number, not the account number, and we can tell you, well, that's a high risk bank account and you should be
Oh,
concerned.
right. Okay, so usually I was seeing that services would take a routing number. Maybe that is the ABA number. What I'm saying.
Exactly.
I remember back in the days, Walmart had a bank, Wolf Forest Bank. I think it still exists.
It does.
And for what it's worth, right? I don't think they did, KYC correctly. There was a lot of people churning through that bank, and every time we see a routing number from, there's like 20 of these Wolf Forest Bank routing numbers. It's like, oh, we gotta do a little bit more validation with folks coming through that channel.
Well, with the emergence of branchless banks that were
Okay,
largely pushed forward by the pandemic and the ability for consumers to open accounts without ever being face to face, which is
sure,
standard practice these days,
right.
some of these banks are clearly associated with people who are perpetuating fraud, people who are high risk. And we recently did a study for an auto lender, an indirect auto lender, meaning
Sure.
it wasn't one of the
Manufacturers.
automakers,
Yep.
right? It was an independent auto lender. And what we found was if their applicant or the co borrower listed on the applicant, we could connect to a high risk bank account, the default rates doubled. Not that they applied with it, merely that they have that account there
Association.
that we were seeing in other places.
Right. My God. I mean, I've been to these car rental places, and right up on the counter, there's like
Yeah,
a whole printout. We don't accept cars from, all the names of these
100%.
like headless banks or mobile only banks, and because it's easy to get through, and you know, I don't know what kind of KYC KYB process. I mean, they should. I think they should use your process when they onboard a client there to see
Well,
if this person dorked up another account somewhere else.
100%. I'll tell you a
Yeah.
interesting story. I
Yeah.
was at with a large rent to own lender.
Yep.
You know them, but we were talking, and they said, John, there is a TikTok that educates our customers on how to defraud us, utilizing certain bank account types and then putting stop payments. And the TikTok ends with how to hide from our repossession personnel.
Oh God. Right. Yeah.
And
Yeah.
they said, I don't know what's scarier, that they're using TikTok to figure out how to defraud us, or they have to be coached on how to hide from the people who are coming to collect our
Yep.
stuff.
Yep. And that's probably listed on Facebook Marketplace to be sold, right? It's an
Yeah,
industry.
that's exactly right.
Oh my God. Well, I see you at the shows all the time, John. If today, right after the show, you encounter a lender that doesn't use some ABA routing, some bank account verification, what would you say to that person today?
I would say you're missing opportunities. There are opportunities and signals in this data that is going to help you make better decisions. And I would say test with us. Send
Right.
us a data file. We are fully able to retro. And what we find is that not only do we score non prime consumers more effectively than traditional scores, but we were able to identify pockets when you matrix our scores with the traditional scores that are going to help you tune in on where your best opportunities are.
Right. So reduce fraud, you
Yep.
know, fraud losses, credit losses, one side, but this lender may have this kind of an open banking, really frictional process, right? Because they're scared. With this, they can maybe increase conversion because they can, sort of take that off the table from page 1 to page 3, maybe, right? And use your
Absolutely. So
process.
we call it manage friction. So don't start with maximum friction.
A lot
Inject
of people,
friction in the process where it's
yep,
warranted based on the risk profile of the consumer.
because you end up, you, you're still going to end up with all the frosters in if you don't have right protection, and you're only pissing off good customers.
That's right. So
Okay.
put those guys on in the express lane to funding them if they're clean
Yep.
accounts,
Right.
and then only take the risk of abandonment where it's associated with the risk of non-payment. And
Right.
then when those consumers abandon the process, you can feel the fact that it's, well, I might have just, as I put that friction there, maybe I threw out some good with the bad, but I
That's right.
probably captured a lot of the bad. Whereas when that process is at the front, you really don't know
That's right.
because you haven't weeded out the low risk consumers and put
That's
them
right.
on the fast path to conversion.
That's right. And the pissed off good customers, they know they have choice. As soon as they
That's
see
right.
something like this, they'll go somewhere else.
You
And
know,
then, if,
I ask people, Tim, a lot of times.
yeah,
10 years ago, I had a phone company that I was kind of married to, right? So it was like, oh, I use Verizon, AT&T,
yeah,
T-Mobile, whatever. That's who we use. Nowadays, it's who's got the best offer, who's got the cheapest phone, who's got
right,
whatever the best deal is. The
right,
loyalty scenarios are at a low point.
right, right. Fascinating. And I want to come back to that retroactive testing.
Yeah,
Surprisingly, a lot of people don't actually know what that is. So the way I understand it is that I can probably take, the last 6 months, 9 months, a year worth of just routing count numbers, maybe some other elements you need. Don't even have to tell John which one was good, which one's bad, and you will
that's right.
score this. And I'll bring it back and say, you know what? Had I used this score, had I used some of the analytics from ValidiFI, I would have prevented at least 10%, 20%, 30% of the defaults. Is that how it kind of works?
That's exactly how it works. So
Okay.
you send us, and I would encourage you, you're right, you can send us minimal data. I would encourage you to send us 6 PII elements. So
Yep.
name, property address, phone number, email address. If you've got social, that's
Yep.
helpful.
Of
Bank account and routing number. If
course.
you send me those 6 elements and the time of the day that you saw that consumer,
Right.
I'm only going to use the benefit of information I had
Prior.
prior to that moment,
Yes.
and I will generate scores. If you want us to do it in the blind, meaning we have no idea of who did what, we're happy to do it. We would suggest that once we return that data to you, that you then provide us performance metrics and we
Right.
will do the analysis that says to you, this is what we would have recommended based on our score sets, our fraud rules, our
Yep.
account validation metrics that would have happened at that time. And we're able, in every case, to come back and say, you would have lost X% of the funded accounts that you did in this scenario,
Right.
but the impact to your default rate would have been Y.
Exactly.
It's
It's got to have a
always
1 to 3, 1 to 4 trade-off, whatever the
That's
trade-off
exactly
is,
right.
right?
And
And
you will
then,
be able to easily connect the dots. And then the other thing about us is if you want to get into an arrangement with us where you say, I don't want to lock in for 3 years, I want the right to terminate based on my unhappiness with whatever happens or change in my business, we're
right.
fine with that.
Wow. Is the retro analysis free, John? Is it something you guys just do to kind of win the trust of
We
the
do.
customer?
Yeah, we
Wow.
do. I would say the caveats to that
Of
are
course.
two. First is you've got to have enough business to warrant us spending the time and effort. If you
Oh,
send
of course.
me 100 records, it's not going to be worth your time or mine.
Right.
That's one. And then as a quasi ladies gentlemen's agreement, we ask that you get back on the phone with us and tell us what you found
Of course.
because we're spending the time and the effort and the man people hours to do this.
That's right.
There has been times in the past where people never look at it. And frankly, that's a little out of balance and not something we can support longer term.
Right. Yeah, exactly. No, that makes sense as well. I can imagine why anybody wouldn't do this. Any self-respecting lender, financial services companies, or anybody that touches routing account number that has any value transacting through that needs this.
First of all, it's compliance if you're taking ACH payments.
Right, going back to the NACHA rule,
Right.
and that
I'll
is
tell
a
you,
rule you got to follow. There's no
that's
way
right.
around that.
But I'll tell you, that's the least of the value-based reasons upon which you would make that decision, because
Right.
there is so much opportunity. As an example, we recently went live with a company that came back to us and told us, since we have enabled your service, we have a 50% increase in our first-time automated payment acceptance, and we are at an all-time low point of consumer interactions where we're having to help them.
I feel like, John, you should increase your price. I mean, I feel like that 1 month, I don't know how big this client is, but 1 month of savings and improvement pays for the whole years of cost.
They reached out to us, and essentially their posture was, what more can we do to
What
get
else do
you?
you have?
Yeah.
Right. Yeah. Wow. Are you guys able to validate debit card numbers at sometime in the
We
future?
are working on that.
I love that. Yeah.
Sort of the holy grail is, could I take a debit card number and marry it back to the consumer owner of the bank account and get the bank account and routing number?
Right.
76% of debit cards are Visa branded. 20% are MasterCard.
Okay.
They kind of hold the keys and the power in that scenario to make the marriage between those things happen. And there's been some positive movement behind the scenes, but we haven't seen, and we're plugged into it, but we haven't seen the ideal answer in a way that it operates with the
Right.
right coverage and the right timing. You know, you need this stuff in 200 milliseconds, right?
That's right. Yep. Oh yeah. Well, I feel like if anybody, ValidiFI will be the trusted party to house some of this information because people know that relationship. The banks knows their relationship. The card processors knows their relationship, right? It just needs to
I
be housed
appreciate
somewhere.
that. We're certainly working to be that, and
Yeah.
we want to work with our customers. We believe there's so much opportunity to eliminate fraud, to make better decisions,
Yeah.
to marry consumers into products that are beneficial for the consumer and the
Exactly.
business, so that you start a profitable, beneficial relationship and it
That's
grows
right.
from there.
That's right. And also it could be tokenized. So if you have more information, it'll make the onboarding process of any kind even smoother. Whatever instruments that I got as my first impression, you can validate the whole thing, whether it's a debit card number, whatever it might be, or a routing account number, whatever is out of wallet, I can verify myself.
That's right.
Yeah.
That's right.
Wow. This is what I wanted to talk to you about, man. This is like, we can sit here and talk about it for ages. I feel like this finally crunched my thirst.
Well, listen, firstly, I'd be remiss if I didn't say congrats to you on all the success.
Oh, thank you.
And
Appreciate you.
you are, I don't know when you rest, but
Oh, well.
not much, because I know you're on the western side of the U.S. and it doesn't matter what time I email you, I get a response pretty quickly. So I really appreciate you having me here.
Yeah.
Excited for you, excited for the partnership we have with you guys, and our data being available via your
Yep.
world is helpful to all of those clients, and we're looking forward to doing more
Yeah.
great stuff together.
Yeah, people come in and name it. It's like, oh, do you have a LendAPI plugin? I'm like, yep, yes, here it is. So
Well, that's
you made
music
my
to
job
my
easier.
ears.
Yeah, we'll do more. John,
You
thank you
got
so
it.
much. See you at Lend 360, Money 20, all these shows later this year. I really appreciate you giving me the time to come on and really demystify some of this stuff. And I think people just need to know that it's not just a simple fraud detection. It'll help their entire business knowing this information.
It
Yeah.
really has ramifications across the credit
Yeah.
application onboarding life cycle.
Right. Amen. Well, John, thank you so much for giving us the time on this podcast. We'll get this thing processed and pushed out there right away. Thank you, John.
Look forward to seeing you soon.